Hi, this is Anthony Parent of IRS Medic, and we got a great episode today. Unfortunately, Keith Redmond can't join us today, but I have John Richardson with me. Thank you so much for joining me, John. We're going to have some fun here today. Let's get right into it. And we were teasing this episode as, we get some really bad ideas coming from academia, and that we have some insular people, if you will, who pass these laws that rule the rest of us, but they don't ever affect them negatively. They become the experts of them, and now they can go and give speeches and have books and be the experts and be paid to be the experts and then be paid to teach what they know and to teach the regulations and laws they create. So I was trying to think of a really good way to start off today. And luckily, someone I follow on Twitter follows me, Stephen Arve. He launched off with this, one of the biggest academics, the one that I was standing right in front of me. Tricksters and banksters on Jekyll Island off the coast of Georgia during 1912 wrote the Federal Reserve Act, which that former college administrator, and this is so true, Woodrow Wilson signed into law. Apparently, after 2/3 ratified the 16th Amendment. I'll get back to that at the end of our episode today. And taxation of only a little bit. It was only going to be a little bit. And so really the premise that we have for today's show is we have a lot of bad ideas that come from academia. And so I just want to say, well, what's the next bad idea I can think of? Oh, I remember this one. I was a part of this. 2017, we went down to Washington, D.C., and we witnessed...
You're not, they can't see the...
Oh, I'm not sharing the screen. Thank you, John. Thank you. There we go.
Oh,
got this.
I remember that.
And I'll put the link to this in the share right now so anyone could go there. I think this is a great episode. Elise Bean, weird thing. She didn't seem to understand her own law that she was the claimed architect of. And now I believe she is a professor. But John, you ran into Elise Bean last year. Is that right?
Yeah, I actually did chat briefly with her last year at a, when I was in DC. And I certainly don't think that she's on the faculty of any academic institution, at least at the moment. But, I may be wrong. I mean, it was...
Well, she was introduced as Professor Elise Bean.
Sorry, maybe that was true at the time. I don't know.
Yeah, so she might not, but at the time, she claimed to be a professor, and this came from her.
Oh, yeah, could be, yeah.
And so now, and I would just say this, what we could say is this, in 2017, we didn't know everything terrible at FATCA. A lot of things have developed. So where is the apology from Elise Bean? She claimed that there was going to be all this revenue that was raised, and it went terribly. FATCA has been nothing but a disaster, a complete disaster, hasn't brought in any of the revenue. It's only been creating headaches for taxpayers, the IRS, worldwide banks, the entire world. Why invading privacy and violating the European privacy law, and it's violating it right now as we speak. So with academia not doing so good so far, this is what got my blood boiling here, and I hope John can keep me rant-free today, or crazy rant-free today. This was a little bit much here. This is a little much, John, I got to say. This is asking a lot for me not to freak out here, but this is the headline of this case. New Supreme Court case could unsettle large, long-standing parts of the tax code built upon a bipartisan basis over decades and give a windfall to multinational corporations. John, I just got to give a start with this headline because
Anthony,
you want to. Okay, all right, I'm going to give it to you. I'm gonna do my thing here. I got to give it off to you. You got to keep me calm here.
You want me to keep our discussion grounded, do you?
Yeah, okay. We need to. This is
so I think it's interesting to actually parse the title of this.
Yes, that's kind of where I was at. Yes.
So let's parse. So a new Supreme Court case. Now, this is, of course, referring to the Moore transition tax appeal that the U.S. Supreme Court has kindly granted cert to hear. Mm-hmm. Granted the cert petition. The issue on that, interestingly, and we'll talk a bit more about this, but what's happening is, and I'm not expressing this because...
Hey, we got Keith to join us. Hey, just excuse me. Hey, Keith, thanks for joining us.
Hey, good morning. Sorry,
good morning,
guys.
Bud.
Had a mommy issue.
Right on. Well, we're going here, so we're glad you could be here. So we're just sort of setting up some of these ideas that we have from coming from academia, and now we're talking about the reaction from the Tax Law Center at NYU Law. to the more transition tax. And so we're parsing the language to this headline a little bit. John just started in, so go ahead, John.
Good.
So it's interesting about the appeal of the Supreme Court of the United States. The question that they are presiding over, interestingly, is not about it doesn't talk about the transition tax. It's whether, as a constitutional requirement for the 16th Amendment income tax, you have to have realization of income. And, I remember years ago having a YouTube discussion with you, Anthony, about the Glenshaw glass case, for example. Certainly, if you receive income, if you actually receive it, it's definitely been realized. I suppose the issue that they're trying to get at is if you don't receive anything, whether that meets the test of being realized. But what's very, very clear is that this appeal is not really about the transition tax. It's basically to forestall the possibility of things like the Elizabeth Warren wealth tax. So, this is, in my view, a good thing to have a discussion about.
Oh.
Okay, I think it's a very good thing to have a discussion about for many reasons.
Yeah.
But these types of people, they don't want a discussion about it at all.
No, and this is really what I could talk like how inflammatory this headline is, and this sort of just reminds me. This sort of looks at something like some law school student writing a moot court brief, not quite getting when you're being dishonest, you're actually not very persuasive. Okay, so let's talk about the dishonesty in the headline. New Supreme Court case, that is true. It's a new Supreme
could
Court.
Unsettle large, long-standing parts of the tax code.
Right.
Let's look at that and see.
Yeah, that's the part. It's like, unsettle large, long-standing parts of the tax code. Okay, well, actually, it's the transition tax, which was Section 965, and it was brand new in 2017. It was brand. Let me repeat. The thing that they're saying is unsettled, long-standing parts of the tax code built on a bipartisan basis, which I think there were some Democrats who voted for Trump's tax, but very few. This thing that Trump put into that and that they complained about, this terrible thing that they complained about, is now all of a sudden, they didn't want the Tax Cuts and Job Acts. They did not want it. Now all of a sudden it becomes, whoa, this is everything here. This is the most important thing. And so that's the sort of duplicity that would be, if you were in court, a judge would ask you about that. Like, well, that's funny because this is a 2017 law, but you're inflaming and you're muddying the waters. This is not providing clarity to what the issue is about. You're saying it's something that isn't true. So what would you have to add more, John, to this headline?
Well, what they're doing is claiming that basically that there's a real danger in the court ruling that income has to be actually received in order for it to be called income. See, what they want is a world where, on the first day, God created the idea of income. He called it income, and so it was. And then they moved on to the second day. The problem here is that obviously income has to mean something, okay? And regardless of what side you are on the ledger here, it would seem to me that simply calling something income does not make it income. Now, their point is that there are many, many deemed income rules in the Internal Revenue Code. That's part of their point anyway.
Okay.
But there's nothing quite like this transition tax. The examples they give are generally, I think, completely irrelevant examples. Things like, the income from a partnership is deemed to have been received by the individual partners. Well, those are situations where obviously the U.S. has taxing jurisdiction over the income, et cetera. It's just a question of who pays the tax. That has nothing to do with something like the transition tax, though, where it's really a tax aimed at foreign corporations, which the United States does not have jurisdiction over at all. Okay. So as an in run around that, problematic legal principle and treaty, well, they say, well, oh, wait, no. Of course, we're not going to tax the foreign corporation directly. No. Instead, we'll simply pretend the U.S. shareholder received the income, even though they didn't, wink, wink. And we're going to make them pay the tax. So I don't see any reasonable relationship between the transition tax and things like, partnership income or, trust income and things like that. Those are things that, we're on both sides of the ledger. The U.S. can tax the stuff anyway. Okay.
Well, and I'm reading it. Well, and I'm just reading this, John. But here's something that because this is sort of this is what is going through my what I'm thinking about as you're talking. I'm like, well, these are supposed to be tax professors, right? Okay, people who are learned, and really what they are though is they're full out advocates. I mean, they are 100% all about what the government is missing, the ability to do this. So, but my question is like, well, what's driving you to take a partisan stance? Because this is most certainly a partisan stance. And we're looking at this sentence right here. It says, before the Tax Cuts and Job Acts, U.S. shareholders could indefinitely defer paying taxes on their share of earnings in their CFCs.
Anthony, could you stop on that? I just want to make a comment on that while you got that highlighted. I'm sorry for interrupting, but I think this is extremely important, okay? That statement in and of itself, all right, is in my view an outright lie and deliberate distortion of reality. Let me tell you why. Okay.
Thank you.
If you look at the Title of 965, they call these deferred income corporation. They're not deferring anything. What's happening is, that these are foreign corporations that happen to have U.S. shareholders who are not subject to U.S. taxation. So it's not a question of, well, you're subject to our tax rules, but we're going to defer. You don't have to pay the tax right now. It's a question of you're not subject to U.S. taxation. So, and then this whole business of could indefinitely defer paying tax. They're not deferring paying taxes. They either receive a distribution, in which case it's taxable, or they don't, in which case it's not. That statement, and this was like on the law school admission test, an LSAT question, right? You would send that statement out and you would say, this statement assumes which one of the following. Okay, I'm not feeling particularly creative this morning, but how about A as the answer? That all income in the world is eventually to be taxed by the United States. Right? I mean, that's what it assumes. I mean, I find that statement in particular extremely offensive, right?
Yeah.
Because it's just pure unadulterated bullshit on its face.
It's
I'd
really
like to-
something.
I'd like to interject something,
Yeah,
if
please,
I may.
Keith. What
And
happened?
it's maybe it's neither here nor there, but it is an observation after listening to you guys speak about this, is that do these tax professors realize that they're, as a result of this is one very big example, there is no incentive for an American overseas to enter the U.S. tax system, especially an American overseas who has one of these CFCs, quote unquote. There's no incentive. Why would one do it? And this is just an example that if you're in the US tax system as an American overseas, 5 years down the line, all of a sudden there could be another retroactive tax. So do you see where I'm coming from? There's, the ones that are not in the system don't have to deal with this transition tax, and they're feeling very grateful. So I'd like to know what these tax professors think about that, because that's the reality on the ground.
Okay, two answers to that, Keith. The first is that, I've been sort of thinking and writing blog posts about this for a number of years, and almost none of the commentators on this acknowledge that these rules technically apply to individual shareholders of CFCs. They always write from the perspective of the multinational, Apple,
Yes,
Google,
yes.
or
Right.
something like
Right.
that. Now,
True.
interestingly, I'm working on a blog post right now called, I think, The Four Faces of the Transition Tax. All right. But at the extreme, right, the first phase is the way this applies to multinationals. And for them, it actually was not a bad deal at all, because they got, by agreeing to this, first of all, if their view was the incomes were really deferred, but obviously they're not deferred, or they would have been brought back at some point. Okay. But just keeping the fiction up for a minute. Okay. The big lie, right? Keeping it up for a minute. They're basically going to pay a lower tax rate than the 35% that existed at the time, but significantly in return for this whole stuff, they got a tax reduction from 35% to 21%. I mean, that's 14 over 35. I don't know what that's something like a 40%, percentage decrease in your tax rate, which is not a bad thing at all, right?
No,
not
good for them. Yeah.
Now, so they got distinct benefits. They also got, although I don't believe for a minute that the U.S. moved to territorial taxation. I think that's a lie that's almost on a par with the lie in this statement. Okay, when the U.S. moved to territorial taxation, what it did was it simply increased the territory over which the U.S. exercised tax jurisdiction. And of course it is, because the proof of it is the guilty rules. It's sort of like, the good news is that you're not going to pay tax on dividends from foreign corporations when they come up. The bad news is that we're going to make you pay tax on it before you pay the dividend. I mean, the whole thing. I mean, it's such a joke. It is such a joke. It is just so riddled with lies.
And the things like the statement is just pretty amazing. Before the Tax Cuts and Jobs Act, U.S. shareholders could definitely defer paying taxes on their share of earnings of their CFCs. Okay, so Subpart F anti-deferral regime. They just mentioned it above. They mentioned it it's right there in the article above. Subpart F, you know what it is. You have it right there, and you're acting like Subpart F. This is written as if Subpart F isn't there.
Well, what they mean by that, okay, is they mean Subpart F in the traditional 1962 sense that was applied only to, investment income and other kinds of, mobile income. It never applied to active business income. Okay, but anyway, this is an extremely offensive article. All right.
Yeah, and so I mean, they are out for blood on this thing, and here it is. Now they're going to get into the mores.
Well, okay, let's pause and look at this for a minute. Okay, in this case, the Moors invested in CFC, incorporated in India, controlled by held 13%. That's fine. Company turned a profit. Now again, they say the Moors it was deferred. I want to pause on this for a minute. That is such a distortion of reality that I am wondering if that would qualify as an outright lie. Okay? I mean, there are mistakes, there are distortions of reality, and then I think there are things that are possibly outright lies. The evidence in this case is that there was no expectation whatsoever of a dividend ever being paid in this. To the Moors. There was no expectation of that. There may never have been a dividend paid to the Moors. So in fact, there was no deferral of income to the Moors whatsoever. It's simply a case of the income of the foreign corporation not being taxed to the Moors. And in the event that if they ever did get a dividend out of that corporation, then it would be taxed as U.S. income because they were U.S. residents living in the United States and taxed on their worldwide income. Again, we have this assumption that all the income in the world is just sitting there dormant, waiting to be taxed by the United States of America. So, I mean, if you believe the thing I just said, then go ahead, buy into this article. But if you don't, and I think you don't, then I think you need to understand, what a seriously a damaging article this actually is, in my view.
Yeah, they're because look what they have to say in order to defend what's rather indefensible. And I think just to clarify, this is sort of how it works. Is that okay? Multinationals are the big whale. Okay, multinationals can pick where they're where they're headquartered, though. That's what it means. that, well, it's not a U.S. company. They're headquartered wherever. That means they could not be a U.S. company and do other things that you can't do. So to attack multinationals, well, you can't. You can't do it. They're not U.S. persons. The main company is not a U.S. person for tax purposes. So they go after multinationals. Yeah, these multinationals are doing all this abuse. So what we're going to do is we make sure we tax U.S. persons. We'll put these rules on the people who can't do all the stuff we're trying to do.
Well, that's exactly right. What you do is you attribute the income of those things that can't be taxed directly to people who can be taxed directly.
Yeah.
And you create these kinds of fictions. Say, oh my God, seriously? You mean we really can't tax an India corporation? Oh my God. Well, Jesus, we better look for a U.S. shareholder in that corporation and deem that person to have received that income, even though they didn't, and tax them. Now, I would expect Keith to jump in at this moment and say, well, then wouldn't it make sense for every non-U.S. corporation to ban U.S. shareholders?
Well, yeah, because it's not in their interest to have any
There
U.S.
you
shareholders.
go. Good answer. Good question, Keith. Okay, and I think that the world generally, and this is why. Anybody who understands anything at all about the U.S. tax system would be very, very reluctant to have participation from U.S. citizen investors. Okay.
Yeah.
Yeah, you don't want it. In this case, they keep going here. This isn't this statement right here is bugging me. To win the case, the Moors would have to not only convince the court that income has to be realized before it's taxed. Well, actually, that's the law. That's called the law. But also, they can't be taxed on their share of the income that the CFC realized.
Yeah. Okay. So this is actually another incredibly false statement. Let me explain why. I think it's helpful to actually read this stuff, okay, in sort of its logical connections. So they're talking on and on and on, but the most significant language in it is in the second line from the bottom, the words "but also," right? In other words, they're saying that to win the case, all right, they have to establish two separate things. I don't think that's actually the case at all. There's two issues, right? There's the issue of is it income, and then does it have to be realized at all? I think that an interesting attack on this would be that it's not income. Okay, it doesn't matter whether it's realized because it's not income at all. And I think the way you probably begin to argue that it's not income is sort of it's like this. Okay, so you go on from 1985, and this company's doing its thing in India. It's reinvesting all its money, and the Moors are sitting there in Washington State. The only way the situation could be worse if they lived north in Canada, of course. But they're sitting there in Washington State, and under U.S. laws, they are 100% compliant with U.S. laws. This income is not deemed to them, is not being attributed to them under U.S. law. So they are complete compliance with U.S. laws. Then all of a sudden in 2017, now, the reason I think that's significant is that even if you argue, and they all argue that, well, that India corporation earned income, so income was earned somewhere. It was earned somewhere at some time. And because we're the United States, therefore we can find a way to tax it. But just hang on for a minute. It's one thing to argue that taxation in real time, the way they have with the guilty thing, right, on a prospective basis. But surely, if you go back to 1985, that has ceased to be income. That is now working capital of the corporation. All right, at that point, other than an extremely obnoxious fictional sense, oh, look, there was income in the past. It was income in the past.
You gotta get that.
Yeah.
Income today.
All right, I want to ask a question for Keith. I want to ask a question for Keith.
Okay.
As a resident layman. All right,
Yeah.
Keith,
do you agree with what I'm saying, or do you think I've gone out of my mind on this?
Well, we're all going out of our mind trying to figure out what's going on here. I think we're all
right.
This is a little much. But Keith, so this is sort of, and this is the problem with academics. They live in such a bubble,
Right.
You will almost suffocate in how naive it is. Naive is the word I think I want to use.
Yeah.
So this is what my question for you, Keith. Let's say that you wake up that you are a shareholder in a company,
Mhm.
and you're just you're hanging out, and you're living a very modest life, but you're a shareholder in this company. And then the next thing you know is the IRS gives you a $14,000 bill, and you're saying, "Great, I can't pay that." Do you know how? So what do you think somebody would do? You're like, "Okay, great, but I don't have the money to pay the tax. I don't have money to pay the income tax for the tax bill of the thing that you say I have." So do you know
Right.
how anyone would go about settling that with the IRS?
Well, I guess I have to ask you a couple questions before, and I
Sure.
assume that I'm the American overseas.
You are the
Let's say
American
living
overseas, and you're living
living
a
in France.
modest life. You're
Right.
living a
But
life.
am I in the U.S. tax system or
You are
not?
in the U.S. tax system,
Okay.
and now you got a bill
Um,
you can't pay.
yeah. I
What do you
guess
think
if
you
I'm
do?
I guess if I'm I guess what I'll do is if I'm in the US tax system, then I would have to work out some type of payment plan with
Yes.
the IRS, and then that would be the coup de grace to retire my US citizenship
Yeah.
to move forward. That would be it. There is no other way to do it. That would be it because
That's
it doesn't make sense to it would be actually moronic for me to hang on to something that's going to be financially ruining me and my family.
I
That's
think
what I would do.
moronic. Yeah, moronic is a good word for this because this is really how it works. Like, okay, you have a $14,000 bill with the IRS. Well, you could settle that. Maybe they'll take $0 for it. In order to do that, you would have to submit a financial affidavit of showing what your assets were. Okay, put down your. It's like, okay, what's your monthly income? Nothing. I just live on the streets of India. I just sort of live a nomadic lifestyle. My income's nothing. Okay, what's your
Yeah.
asset? Well, I have this share in this India corporation. Okay, well, what's that worth? Well, actually, it's worth negative money because the ownership of it led me to this tax bill.
Good
That's worth
point.
negative because the very ownership of this thing, it's only creating a liability for you with the IRS with no ability to pay for it. And who would want it? Who would want this stock that,
Yeah.
well, it's building up and, you have to pay money on something you never got. So you don't have the money. And my point is this, you have these academics who believe that the IRS has unlimited administrative
Right.
abilities.
Or Anthony, I just don't pay the bill depending on my situation on how much I'm tied to
Sure,
the US.
that's
Because if
most
I'm
likely
in France, I'm protected that way.
right.
So that could be it.
So
Yeah.
these professors want then these professors want tax bills created that people can't pay because they think that will help. I guess they're yeah. You know what we should do is we should create a situation where we'll give people tax bills that they can't pay, and we'll punish whatever asset it is so bad it becomes valueless because the taxes are so terrible. And that's really
Yeah.
the absurdity of this, that they just assume. And who are these policemen that these professors want? Have they ever done any police work? Have they done any enforcement work? Do they know
And
it's
they're going to
not
do
really
it
a lot
around the
of
world.
fun to knock down someone's door and take their assets? But
And
they're
where the
protected, right?
Yeah, and where are they going to do that? They're going to do that in Germany, France,
Right.
Timbuktu. Is that
Right.
what they're going to do?
It does seem to be about protecting turf here. Um, oh boy, all right. I want to get to. I
By
want
the
to
way,
get to
Keith, the answer to your question is, and this is what really happened, is they just liquidated their companies.
yeah.
Okay,
Yeah.
they had to liquidate the companies.
Yeah.
In
Now
order to
and,
pay
and now
Yep.
basically,
tax.
and as I'm moving through this article, they're basically conflating, and I'm looking at this. The Moore's argument against taxing owners on income realize that the corporate level poses threats to major portions of the tax code. Basically, they're saying that
What?
if rule,
What? Maybe
right? Yeah, exactly. Right. First of all,
okay,
so
they're
what?
making it sound like that's a bad thing.
Yeah, right. Well, their argument is like, well, if you go against this, you're going to stop all the pass-through taxation of all these companies.
Pass-through
Well,
taxation has nothing whatsoever to do with this.
yeah, and that's they're conflating. I
Nothing
mean,
whatsoever to
completely
do with
conflating.
it. Because
And
in
that, yeah,
pass-through taxation, the U.S. has the jurisdiction to tax the entity and the individual. It's
right.
simply reallocating money that they have. income that is income under U.S. law that they have the right
Yeah.
to tax from one
Lost
to
my,
another.
hold on.
Completely different situation.
Right on. Yeah, this is just going on. It's just getting worse and worse here. The conflating and just it's a disingenuous. This is the like shrillest advocacy for laying the groundwork for what I would say is a wealth tax. And like, well, we can't get it passed, and it's amazing because the same people, if you look at their Twitter feeds, if you look at them, the same people who say, you know what we need to pass a wealth tax, are also the same people who say, actually, we don't need to pass a wealth tax because we have it right here. So which one is it? Do we have the law or don't we? Why do we need to pass a wealth tax if you're right about if you're all right about this? That realization is not required. That will define incomes through some who knows if we don't like you. See, some 40% of business profits flow through these pass-through regimes built up on bipartisan basis over decades. What a stupid thing to say.
It really is.
Of course they would,
because
they don't have arguments, right? And I think that's what we see. If this is what if this is what you're reduced to, you don't have a good argument.
Now we go, give a windfall to corporations.
There we go.
Wow.
There we go, right? The windfall corporation. We didn't steal the money of corporations outside the U.S. We didn't do that. Therefore, they got a windfall. That we were frustrated from taking things they didn't earn.
Well, what they
got to win,
Anthony, is that is that the corporations now have a 21% corporate tax rate as opposed to 35%. So if you undo this, then the corporations get the benefit of that. But look, here's the thing, right? Although I am personally, as you probably guessed, not in favor of wealth taxes, okay, I don't see that as the real issue here.
Okay.
The issue that we're talking about is what I regard as an extremely disingenuous, set of arguments here. That contain statements that I think are very, very close to intentional distortions of reality. Okay, to try to make their point. It's inflammatory language, and I don't think that, and I think that, what's important here is to have a reasoned discussion about this issue and not an inflammatory language. Now, I am inflamed talking about this. I am angry. Yeah. And I think
hear you. So, gentlemen, I have to go, unfortunately.
All right,
okay. Thank you.
It just goes on. This is the win. I mean, this is like they're getting a windfall because they haven't done it. And now, now they argue, well, we don't even need the 16th Amendment, but we also can do it under Congress's separate power to apply excise taxes. This is a power to tax a particular use or enjoyment of property. In this case, a choice to own a CFC with deferred income. As a result,
that's fine, but that's not what they did, is it? Okay.
Yeah, I know.
Case closed.
Yeah, right. So that's great, but that's not what it is. And if you're so strong on your why do you have to go to this? You're going to an excise tax argument. After going through everything that I guess they didn't convince themselves. I think Anthony, is what it is. Like, here, add this in here too.
Anthony, pause and ask the question again. Why do they get into the excise tax? Now pause and think about it. What is the answer?
Because
they think everything in the world is income. Right. Because they think everything in the world can be taxed in some way or another.
Right.
Okay, that's the answer.
That's the answer. They want it. And they want it, right? Because it's not that, they're an indirect beneficiary of the tax, so not a direct. And so it's just, this is, so here it is. We do not believe that the 16th Amendment should be read to include a realization requirement. So, okay, so you believe there should not be a test for income is basically what it is, because what's the test?
No, the test, Anthony, is, it's not quite that, okay? The test is that as long as somebody, when they not should be read to include a realization, what they mean by that is we do not believe the 16th Amendment should be read to include a requirement that income be realized to the person being taxed on the income. That's what they mean. Okay, that's what they mean. So what they're really saying is, look around the world. Let's do a world tour. Okay,
Ooh,
a
that's
world tour looking for income
income.
that might exist somewhere in the world, just waiting to be
And
taxed
it's
by the
all for
United States.
our friends. And I mean, they really are advocating for the taxing power of the U.S. That seems to be their boss. Now,
That's
maybe it's
exactly
because,
right.
I mean, totally. That's who that is who their client is. The power of the U.S. government is 100% their client. So how are they getting compensated? And who knows? And this is really, and this article is really just loaded up with this nonsense phrase again and again, built up on a bipartisan basis, as if that's a virtue, as if there's a virtue in getting Republicans and Democrats to agree on the same thing. Oh, there must be a good thing. No, I think bipartisan means no, they know how to rob us together. It's a partnership between Democrats and Republicans to erode our rights.
Nothing to do with the issue.
And it's not right. That's not at all. Who cares who voted for it? It doesn't matter. That is just flavoring, and that's beyond that. That is advocacy, and this is the problem that we have. And I was thinking about this: is that the FAA is a federal agency that actually I think does a pretty good job. And I'm not talking about TSA, but I'm talking about FAA. I did start taking some pilot lessons, and I'm going through that. I'm like, man, I'm a guy who really is not about federal regulations and stuff. But as I'm going through the FAA, I'm like, actually, this is good stuff that I'm learning. And these regulations are in depth. And you know what? When I think about it, airplane safety is actually pretty good. It's the smaller planes that aren't the safest. And that's sort of why I stopped doing what I did. But I thought to myself, oh, well, here's the reason why the FAA creates rules that make sense. Because everybody who works at the FAA flies in airplanes. So what they rule on affects them. What these law professors up here, what these folks up here at the Tax Law Center at NYU Law, these folks right here, this will never affect them, right? So who cares what it is? Or actually, what they don't know is it might. Because a lot of professors get surprised when they inherit money. Oh, you didn't know that. Now you might change your tune when you find out it actually affects you. And law professors are good at teaching theory, but they actually don't know that much about actually filing a tax return. They actually probably don't. They actually don't know how to fix the problem. But from that theoretical point of advocating for more and more federal power, boy, they just don't stop. Now, I want to move on. We're short on time here, so I want to just move on to this tweet here of yours that you had. And I think we might have dissected a lot of this here already. So this is an article that you wrote here, U.S. green card holders. And you have a little bit more in here. Is there anything else that we haven't discussed that you want to hammer?
Yeah, I think, look, this is a blog post I wrote yesterday. And the blog post was written, by the way, in response to an article written by an academic who claimed that, see, in the Moore situation, the CFC had $132,000 of retained earnings, and $14,000 or $15,000 was attributed to the Moores, and this is about an 11% tax rate from her point of view on the 132,000. And she was saying, well, what are they complaining about? They're getting a break on their taxes. And I may be wrong on this, but I don't think I'm wrong. I think I'm right. I think that is another unbelievable distortion, which clearly ignores the fact that they're taxed in India. And we can go through the example. Just move down, and I'll show you that in fact they are being the transition tax subjects them to an additional tax of exactly the amount of the transition tax. And I'll show you why if you just move down here. Okay, let's go through this. So here we go. Here's the background. The company received, I'm using the exact numbers here. The India company reinvested back into the business in India. The shareholders received no distribution. So just pause in case for some people that's technical gobbledygook. So what that means is that over in India, there's a corporation incorporated under the law of India that's carrying on some kind of a business in India. And apparently since 1985, had earnings of 132,000 was reinvested in the business. Now, the company also, unfortunately, has some U.S. shareholders. Okay, so we move on to in 2017, Congress in its bipartisan, intelligent way, all right, passes this transition tax. And what it does is says, oh my God, look, this company over in India, holy shit, that made money that wasn't taxed by the US. How do we get it? Well, what we do is we look around, is there a US shareholder? So we use the circumstance of the US shareholder to say, oh, you know what? We're just going to make the US shareholder pay the tax, but only on their interest in the company. Now, the Moores had 13% share of the company, so 13% of 132,000 results in apparently $14,729. So they say to the Moores, "Hello, Moores. We have good news and we have bad news. The good news is that well, let's start with the bad. Okay, so the bad news is that you have to pay $14,729 because you own 13% of a company that the U.S. can't tax directly. Okay, that's only a rate of about 11%. The good news, by the way, is that that's a discount to your normal tax rate of like 36%. So you should be happy. Now, continuing on. So once that tax has been paid, under the rules, if the 132,000 were ever to be paid out, which I highly doubt, meaning this is not deferred income at all, the Moores would not have to pay tax on that, okay, because they'd already paid the tax. Now, what I want to show you is that, in fact, the result of the transition tax means that they have to pay an extra tax now, which is basically a confiscation of 14,729, okay? Some commentators claim this is actually a favorable tax outcome. I believe it's incorrect because it disregards some facts. See, many people in the United States don't realize that other countries also have taxes. They view taxes
You
as
come first. There's American exceptionalism there,
by
right?
the United States, having its roots in the American Revolution.
Hey, John, I just want to back off and just sort of there's something you said that sort of like really sticks out. Okay, so we have a controlled foreign corporation, which you certainly can. Yet the Moores are a very minority. The Moores don't control it.
Absolutely not. They don't have any.
So this is a company that, yeah, you're calling it a controlled foreign corporation because the amount of other American owners in it. Okay, you got your rules that way, but in no way do the Moores control this.
Absolutely. If the Moores went to the company and said, "Please, give us 14,000 to pay our tax," you know what they'd say? Don't make your U.S. problem our problem.
Exactly
what they'd say.
There's no reason they have to. There's no, and so it's amazing. So I think that's just important to recognize.
Of course, it's important
that these are people who have no ability to control where these distribute. The only remedy they have is to sell their stock.
Absolutely, that's another reason why it's a confiscation. But let's see how this really looks. So let's imagine there'd been no transition tax.
Yep.
And let's imagine then that the 132,000 is paid, or some amount of money is paid out. Okay, is paid out. Actually, the earnings were not 132,000. It was a lot more than that. It was 13% of the earnings that were 130. But anyway,
okay, yep.
Let's say the 132,000 is paid to the Moores, and there'd never been a transition tax. Let's see what would have happened here. Well, the first thing is, if I'm right on this, and I went through the treaty yesterday, and the laws of India. Okay, as far as I can determine, I mean, this is a revelation for many people in the United States that other countries have taxes. So India is going to tax, is going to slam a 25% tax, okay, on that distribution to a non-resident. That's not insignificant. All right. Now, so the minimum tax the Moores pay, right, would be 25% to India, but they've already paid the other 11% to the U.S. So the minimum tax they pay is now 36%. Okay. All right.
Oh,
so
but think of the savings.
If there had never been a transition tax, the way it would have worked is this. Okay. So here we go. Oh, good news! Your ship has come in. We're going to pay a dividend of 132,000. India is going to charge a 25% tax, but now we get into the the foreign tax credit rules. Okay, the foreign tax credit rules. So on the U.S. side, they're going to get they're going to get a credit for the tax paid in India, but these are going to be, I think, qualified dividends, which means they're taxed in the U.S. at long-term capital gains rates, which means that the India tax under the foreign tax credit rules will completely wipe out any U.S. tax owing. Okay, completely wipe it out.
Okay, I got it. Yep.
Net investment income tax. So here's the bottom line, right? What the transition tax really means is the U.S. reached in and stole $14,729 from the Moors. You know, that's it. Because the point is that even though they say, "Oh, well, the U.S. won't tax the 132,000," well, buddy, India's going to tax it.
Yeah, right. Yeah.
So it's double taxation in the sense that we first have the transition tax in the U.S. and then we have the tax by India, which, as far as I can tell, meets the definition of double taxation, right?
Ooh, wow. Wow. Well, you know what? You know what, John? I think this is a good place to wrap up. You know, we're talking about bipartisanship. You know, one of the other things we talk about is, well, what's the rest of the world doing? You know, like, you know, hey, we got to look to around the globe to make sure that we're not doing something completely wacky. Well, this is something, and I gotta head out real quick here. But this is something right here, great article written in Forbes. I think that's helpful. Be like America. Well, actually, I don't know about that, except for this bad tax policy. And this is just a fantastic article, just sort of, you know, just basically saying, like, hey, UK, don't be like the United States. It's not going to work. You're not going to get this free, great lifestyle. No, it's going to cause a whole bunch of problems. So it's just a great warning. I think it's fantastic that other writers are saying, you know what, this is so bad. Make sure you don't do this whatsoever. Anything to add on this article, John?
Not really. I mean, I think that Robert Goulder, you know, is gradually writing a very, very good set of articles to explain that citizenship taxation is not a great thing. The article heavily relies on what's his name, Dan Needle. I think he's a London-based tax policy a writer who last week also wrote an interesting article, you know, basically saying that he thinks that citizenship taxation is a very bad thing, and that certainly
bad thing.
You know, the UK should never move towards it.
I know.
Yeah, Dan Needle. You know, there's his name.
There it is, right there. Yeah, yeah. I put the links to articles in the super chat there, so you're looking for that. And I just want to conclude with this, John. As you know, I'm glad that I'm glad I'm not alone. I'm glad that by sharing my rage, John, you helped diffuse my rage.
Well, you are only you have rage, Anthony. What are you talking about?
I appreciate that. And this is really, I think, one of my conclusions of what I'm drawing. And when I got into tax law 20 years ago, this was just something that people on my channel would always post. Hey, the 16th Amendment was never ratified. There's absolutely no basis for the income tax. It's all a lie. And it was just, there's a book that somebody read, he's now passed. His name's Bill Benson. The law never was. And I got to say, kind of with this website, and the website was basically like this years ago when I first stumbled across it. I didn't really find this persuasive. I was just like, oh, this is just some crackpot government conspiracy thing. And this guy thinks he's got the secret and this and that. He was some bored guy who probably means well, but, he just didn't have a lot else to do in life. But now I got to say, this project, and it's really something I want to look into. And I mean, I remember reading the IRS's responses to claims like this. And, they never really address the claims. They just say, well, the courts have ruled. The courts have ruled. But they will never go and address the actual claim. And so I think this is really the question I have for people. I wanted to say, are you like me? Are you like me in the sense that a lot of things you might not have believed that the U.S. government, all right, John, I'll just say it like this. Do you think the U.S. government would lie and claim the 16th Amendment was ratified when it wasn't? Do you think that it would be in the realm of possibility?
Do I think the U.S. government would lie? I don't think that I don't think that governments in general, including the U.S. government, have any conception of truth.
Yeah.
I think that they have a conception of deniability and plausibility, and that's probably it.
Yeah.
You know, Anthony, in fairness, okay, this stuff that we've been talking about today is extremely technical. And the problem is that there are a lot of people are writing about it and talking about it who really don't understand it. Okay, so I think the question really is among the minority of people who actually understand it, would they lie? I don't know. I think that the vast majority of people, in fairness, don't understand it well enough that you could attribute an outright lie to them.
Well, this was the Secretary of State, a particular person, fraudulently declared ratification. So it's one particular person. So I think what I would love, I want to look into this more. I might even get the book. I probably should even get the book because this guy went around to every state house to actually look to see what was ratified, and he says, no, it actually wasn't. He has it. So, and here is the link to it. The law that never was. I'll put this up here. We got to go right now, but that's really where I want to leave off. And thanks, John. You're right. It is technical, and it is critical to us that we spread this message as much as we can. And again, people, I want to encourage you to subscribe to the channel and be sure to turn on your notifications so you know when we're going live and you can participate in this chat. This is going to continue, John. We're going to be meeting. We're going to be discussing next week. But really, what I want to go on is I want to follow up on this. I want to have a really good follow up on this, and I think we'll probably see what the reaction is on Twitter and what the next developments are because things are rapidly developing. And hopefully we can get some answers from some people to say, support their position. I don't think we'll get it because honest debate seems to be in short supply. And why are we debating with law school professors? That's sort of a weird thing. Why aren't they just helping?
Well, listen, look, everybody sees the world from the vantage point of where they are. And, I've got to tell you that there's a world of difference between a person who has sort of a pension, okay, and doesn't have to worry too much as long as they live within their means of survival. There's a huge difference between that person and a lot of other people in the world who don't have pensions, and are and things are really, really tough. And that's where we are. The problem is that the people in the universities have been given sort of a platform, to express their views, right, as if they're truths. All right. And I think that this is, a particularly good example. I find it very, very interesting how strong the opposition to the Moore appeal seems to be from the academic community. I'm not surprised by it, I guess, but it's extremely irritating because
they want that $14,000. They want it.
Well, this I find incredibly offensive, right? I mean, they talk like there was another article that said, well, I hope the court doesn't hear the case. What, we're doing this over a $14,000 tax, buddy? Okay. Maybe the Moors, who are just simple people, don't have the money to pay the tax. Okay.
As much. All right. Well, John, I want to thank you so much. I want to thank you so much for joining us today. This is Anthony Parent for John Richardson of Iris Medic. I want to thank you all so much for watching and participating.